Hi, I'm Michael Yardney. Now last weekend, Pam and I were invited to a wedding and we were seated next to a lovely couple who we hadn't met before. As we chatted throughout the night, I discovered he was a partner in a major accounting firm and a serious property investor who over the last, 12, 15 years had grown a very, very significant property portfolio. What then shocked me was that he shared with me he was selling up his entire portfolio, spurred on by all the doom and gloom predictions he was reading. Now, as we got into the conversation, I discovered he was concerned that all those problems overseas were going to impact on Australia. Now, of course, I explained my bullish long-term predictions for the Australian property markets, and he understandably asked, why should we believe the current round of predictions that suggest the property market's going to remain buoyant, rather than those that say a bubble's going to burst? Now, I guess I could have replied, well, how did all those who predicted the collapse of the property market and that we sell up all our properties last year get it so wrong? But instead, I went on to explain that making short-term and long-term predictions about property markets can be reasonably easy. But it's a really different story with what happens in the middle. You see, it's really easy to understand what's going to go on in the next 6 to 12 months. For example, over the next year, property values will be driven up by the same fundamentals that have created the current mini-boom. These are our strong rising population, scarcity of well-located properties in the inner suburbs of our capital cities, changing demographics with smaller households, meaning we need more dwellings for the same number of people, with lower vacancy rates, rising building costs, relatively low interest rates, high consumer confidence, and I guess now spurred on by the fear, people's fear that they're going to miss out on the current property boom. Now likewise, it's really easy to predict what's going to happen in 10 years' time. That is, well-located properties are very likely to double again, as they have in the past and the years before and the years before. But with so many unknowns ahead, so many macroeconomic factors affecting our general economy and so many microeconomic factors affecting the local property markets, it would be a really brave person who tried to accurately predict what's going to happen to the markets in the middle. We do know, though, that over the next 10 years there's going to be a few years when property values are going to boom, as well as a number of years when property prices will stagnate or even fall. The problem is we don't accurately know when these times are going to come. We also know that over the next 10 years there's going to be periods when interest rates will rise above the averages and slow down our property markets. And there'll be times when low interest rates will encourage home buyers and investors to hop back into the market again. I guess the bottom line is the property market's a long-term play. You have to formulate a property and a finance strategist to get you from where you are now to where you want to be in 10 years' time. Hopefully that's going to be owning a multi-million-dollar property portfolio to give you the financial freedom you want. I guess it's a bit like a game of chess. All the pieces are on the board, but only those who can see 3 or 4 steps ahead are going to win the game. So why did so many so-called experts get the predictions wrong last year? That's because many of these people quoted in the press are economists and analysts coming, I guess, from a share market perspective, where they analyse properties like they would shares. They give a broad brush opinion of what will happen to the property markets, but it doesn't work that way, does it? Some of them fail to understand that there are many property markets around Australia, with each state being at its own stage of the property cycle and dependent upon its own microeconomic factors. And then there are markets within each state property cycle. These economists also tend to forget that the property market is dominated by homeowners who are not investors. People don't sell their homes when the economic news is bad, but they'll sell up their shares. That's one of the reasons our property markets are so much more stable than the share market. So how does a property investor really know what's going on if the economists and experts don't? Well, to understand what's happening in your local market, you have to get in the game. You have to be in the game. You have to become an expert in your local market. I know the buyers agents at Metropole attend hundreds of open for inspections every week and 15 to 20 auctions, I guess, every week. They can feel the pulse of the local property markets. They know the type of property that's in strong demand, and they can feel the pressure that's forcing up the value of certain sorts of properties. But as for the long-term trends in property, just look back at history and find the areas that have always outperformed the general property markets. You know, there's all this research available on the internet, so it's not that hard. But then don't speculate. Instead, buy the best property you can afford as part of a long-term property investment strategy, and make sure you have sufficient financial buffers in place to see you through the ups and downs that are surely going to occur between now and when your property is going to value in 10 years' time, or maybe 8 years' time, or if you buy a really good, well-located property with high capital growth, it could be 6 years' time. So you see, 2010 is going to be a great year for property, and I'm going to keep you updated with the changes happening in our property markets in future editions of my Property Update newsletter and in this fortnightly property market update. And now's probably a really good time to remind you that in these changing times, it's good to have a great team of people around you, and there's nobody who can help you quite like the independent, unbiased property investment strategists at Metropole. I'm really proud of our award-winning team. Remember, we've got no properties for sale, but access to every property on the market. So if you'd like to find out a little bit more about what's happening in your local market and what our research suggests is in store for us, join us at our free property briefings in Melbourne, Sydney and Brisbane. Just click on the link down below to find out what's going on. Now, for those of you who are serious property investors, or you run your own business, or you're an entrepreneur, I want to suggest you join us at Wealth Retreat 2010. That's going to be run on the Gold Coast between May 29th and June 6th. If you click on the link below, on June 2nd, it's 5 days, so 3 days during the week and 2 on the weekend. Now, if you want to find out more about it, click on the link below at wealthretreat.com.au. This is an annual event where we limit the number to a really small group of already highly successful investors, business people and entrepreneurs. This is your chance to immerse yourself for 5 days and get to learn with the faculty of Australia's top experts in property, in tax, in finance, in law, and a chance to mingle and network with like-minded people. See, this is one of the things I hear from a lot of very successful investors. They actually need a good network and team around them, and you're going to instantly get that. Some great joint ventures have come from it. I'd love to see you at Wealth Retreat. Just find out about it by clicking the link below. I'll give you your next market update in 2 weeks' time.